Hey, yo, what is up, guys? So this is going to be the video on change in the set of delivery. Okay, so why I'm making this video, because a lot of you guys have been keep me asking how to trade continuations with change in the set of delivery. Okay, so before getting into the video, we must be understanding what is actually change in this set of delivery. Okay, so a bullish change in the set of delivery forms when price touches high time frame key level and then closes above a series of consecutive down close candles. Is going to be the bullish change in this set of delivery. And a bearish change in this set of delivery forms when price steps into high time frame key level and then closes below a series of consecutive up close candles. This is going to be a bearish change in the set of delivery. Okay, so let me show you the chart example. So we have the chart example here. We have just touched the high time frame key level, closed above the series of down close candle, which is going to be bullish change in this set of delivery. And then we have this example of bearish change in the set of delivery. And we have the high time frame key level, we touched it. And then we have the series of down up close candles, which is going to be the bearish change in the set of delivery. Okay, guys, so let's go into the charts to understand it more deeply. As we have that nude forward chart, okay, so we want to see price to just go into that internal range liquidity after changing the shift in the structure. Okay, so we have been taking that sell side liquidity on the chart. Okay, there's a low, which is the liquidity, sell side liquidity. I already created a video on YouTube for free. You can just watch it. Okay, so now we have that change in the set of delivery, or we can say the shift in the market structure, because we've closed above that swing high. Okay, so now we have been into the high time frame key level shift. Okay, so we're taking out these highs. We have this internal range liquidity. Okay, which is the 4 fair value gap, right? So we just have to mark it, and then we want to see price to look for these highs to be taken out. Okay, so right, so we have that buy side liquidity above these highs. Okay, and we have the fair value gap, which we have been trading off of. So we are going to shift into the lower time frames. From high time frames to lower time frames, we can go into the 5-minute chart. Okay, now we have to wait for the change in the set of delivery for price to create. Okay, so now we have that a candle, which is auto block. Okay, we have a series of down close candles, or just a single candle. It's going to be the change in the set of delivery. So we are going to go into the 3-minute chart. Okay, and then we have that the series of down close candles, and we want to see price to close above that high. Okay, and then just give us a nice entry toward these highs. Okay, so let's see what price is going to do, and we are just going to go bullish off of that. Okay, why? Because we have that key level, which is fair value gap. We have the change in the set of delivery after key level, and then we are going to target above these highs for our 2RR. Okay, let's see what price is going to do. Okay, we have that fair value gap, and we've just come below. We have the swing failure. Now we have that high. Okay, this is going to be the change in the set of delivery if we close above that high. We're just putting our stop loss a little high. Okay, so let's see. We've closed. We've retraced into that CST. Okay, and then we want to see price to go above. Let's see what price is going to do. So we have been just going to hit our targets. Okay, there you go. Change in the set of delivery. Okay, let me show you another example. So this is another example. Okay, we have that 4 fair value gap. Okay, so we want to see price to just go below because our bias is bearish. Okay, so we just hit our 4 fair value gap. Okay, this high time frame key level. We have shift in the 4 chart. Okay, so we want to see price to go lower, taking out these lows, right? So this is our initial drawn liquidity. So we want to see price to just go below it. Okay, so let's go into the 3-minute chart, or we can just go into the 2-minute chart. Okay, but here you can see we are not touched the 4 fair value gap, right? So I want to see price to just go into that fair value gap and touch it again. Okay, so we have that for fair value gap test. Okay, we have taken out these buy stops. And then now we want to see price to just close below the candles, okay, which we have done. And now we want to see price to just go for the short positions, and we are going to keep our stop loss above these highs and just go for 2R. Okay, this is just a change in the state of delivery. Okay, and also we have that AMD pattern which is happening. Okay, with the consolidations, we took out the high, touching the high time frame key level, and then we are just going lower. Okay, so boom, we just hit our targets. Okay, this is how you can trade the change in the state of delivery.